Welcome everyone to our work session today. Mr. Collins, who's our chair, is a little under the weather, as some may have seen last night. He is available online soon. He'll be watching us. He lost his voice, and so he will not be able to participate verbally, but he is watching us, and we wish him well and wish a quick recovery. I had a little sickness a couple weeks ago and got better, so I hope he has a quick recovery. So with that just said, I call to order this meeting, and we're going to start. If please stand, an invocation led by me and the Pledge of Allegiance following. Please, Lord, help us make the best decisions for all of our constituents and the residents of King George County. Amen. Amen. I pledge allegiance to the flag of the United States of America, and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. All right. Do we have any amendments to the agenda for tonight? All right. Seeing none, we'll move on to public comment. Comments will be limited to 3 minutes per person. In order to afford everyone an opportunity to speak, please provide your full name and district when submitting your public comment so that it can be properly included in the public record. Is anyone here for public comment? Seeing none, Mr. Dines, is there anybody online?
No, Madam Chair.
All right, we will close public comment. Do we have any correspondence from any of the board members or any of the citizen budget members? Right. Thank you. Now I will ask one question and get a will of the board. The seating is set up. I had given Ms. Fisher recommendations because we have so much paper. Would you guys, for the next meeting, like to have it down again, or do you want to keep it the way it is so we can spread out all the papers? I'm just consensus of.
I prefer to be down there with everybody else.
Go ahead, Ken.
So I like being with the people, but up here we have our plugins and it requires less setup for the staff. So if I can reduce work on them.
That's fair. I'll go back.
Reduce work on them.
Mr. Davis?
I concur with that.
All right, we'll just keep it the way it is. I just want to make sure everybody's voice was heard. All right, thank you very much. Can we have approval of the January 31st, 2024 King George Board of Supervisors Budget Work Session meeting minutes? Can I have a motion?
Make a motion that we approve the January 31st, 2024 King George County Board of Supervisor Budget Working Session minutes.
Do I have a second?
Second.
I have a motion properly seconded. Any further discussion? All right, all those in favor say aye.
Aye.
Any nays? Chair votes aye, motion carries. Now will we move on to the discussion items? The King George County Investments, Leslie Weber, Senior Managing Consultant, PFM Asset Management.
Well, I'm not Leslie.
Well, no, you're Mr. Jones.
But I will introduce Leslie. The county's financial policy allows the treasurer the ability to invest the county's excess funds. However, we have contracted a firm, PFM Asset Management. Well before me, I became treasurer in 2016. I think since 2002, we've been with PFM. Leslie has been our senior managing consultant since 2019. Well-versed in the field. If she cannot answer a question for you tonight, she's very prompt. She'll be able to get it back to you. So she has a presentation to give. We did this back in January of 2019, the last time that there was a little bit of a turnover in the board. And I think it's a good idea just for the board to see exactly where the county's investments are. So I'll turn it over to Leslie right now. She'll do an awesome job.
Thank you. Sorry, I'm a little vertically challenged here. So let's see if this works. All right. So this evening, I'll be providing a brief market update because I'd be remiss not to. So that way we could explain the portfolio and actually the performance of the portfolio as well. So starting with current market themes on slide 3 of your packet, when we focus on Q4 of 2023, some of the current themes are the U.S. economy is characterized by its resiliency. I'm sure the R word, or recession was thrown around quite a bit after the pandemic, right? But now we're starting to see a lot of resilience, even though in the future it's probably expected that there is going to be a slowdown, right? The Fed has a dual mandate of keeping unemployment low and price stability, or keeping inflation in check. And we saw that after the pandemic, inflation was running rampant. We all felt it here in this room. We went to the gas station, grocery store, things like that, traveled, and we felt inflation go up. So part of that dual mandate for the Fed is using their monetary policy to control interest rates. That's one of their monetary policy tools. So that's what they've done. When we went into the pandemic, when the economy was slowing down, what did the Fed do? They dropped rates. Why? The reason being is because they wanted to spur borrowing. They wanted folks to come out and spend money, right? If we look at US GDP, historically 2/3 of that is us, the US consumer, out there spending money. So they lowered rates pretty drastically. And now, coming out of the pandemic, they started increasing rates to try and tamp down that inflation. And we're still seeing that today, even though positive thing is inflation is trending downward. I do have a slide to show that. Speaking of unemployment, it's been continuously strong. The past 3 months, that unemployment rate has been stable at about 3.7. And actually in Virginia, it's even lower than that at around 3%. So if we focus on the Fed for a little bit, we talked about their dual mandate of keeping unemployment low, inflation in check. Now, if we focus on interest rates, we know that rates have been elevated for quite some time. Now, when the FOMC meets, Federal Open Market Committee meets, they set rates. And on their last projection in December of their dot plot, it's a dot on a plot where they actually plot where they think rates will be at the end of each year. Now, looking at the end of 2024, the projections are maybe 325 basis or 0.25 basis points cut, maybe 3 times, and the market does not agree with that. So right now, the overnight rate, so that's the Fed setting that overnight rate, right? Right now, it's about 5.25 to 5.5. The projections show that maybe it'll be between 4.5 to 4.75 at the end of 2024. Now, the market is telling a different story. They think it's going to be down 6 rate cuts of 25 basis points each time, and I'll show you the yield curve that is showing this. Now, if we focus on the Treasury yield curve as well, as an investor on the investor side, we like to see higher rates, right? Because that means more meaningful earnings for the portfolio. And looking at this past quarter, we've seen Treasury yields drop. Well, why? We saw rates peaked at about October, and then rates started to drop over the quarter, and I do have a chart to show you that as well. So even though it has dropped a little bit, it's still, the interest rate environment is still pretty elevated, right? So, and right now, the yield curve is inverted, meaning shorter term rates are showing much higher than longer term rates, and I'll show you that in a little bit there. And how this relates to your portfolio as an investor, and especially with public funds, there's 3 main objectives, especially when we also invest your portfolio: safety and liquidity, and then yield comes last. So looking at one of the dual mandates for the Fed, the unemployment rate, as I mentioned, it's been stable the past 3 months and sitting around 3.7%. Coming off its peaks in April 2020, you could see how high that unemployment rate was. And then looking to the chart on the right, you see that every month so far, we're still continuously adding jobs every month, and it's been a pretty strong labor market. We go to the next slide on slide 5, looking at inflation. Now, the Fed focuses on PCE, personal consumption expenditures. You probably see in the headlines the CPI number, or consumer price index, but the reason why the Fed likes to see this inflation metric, particularly PCE, is because it captures prices that entities spend on our behalf. A perfect example is healthcare. So this gives the Fed a more holistic view. So if we look at the 3 lines there, it'll have PCE, core PCE, which strips out food and energy because those are very volatile prices, so they could see a better trend. And if we look at super core PCE, that also takes out, in addition to food and energy, the housing as well. But all 3 lines have been trending lower, which is what the Fed likes to see.
Excuse me, ma'am.
Yes.
Do we need to wait till the end to ask questions, or can we ask questions now?
You could ask questions.
So I'm looking at what you've got up there, and you said rule out food and energy, but today the inflation rate is 7.2%. That's double anything you've got up there. And that includes food because people buy food, right? So it
Yes.
impacts their spending.
So this is personal consumption expenditures, which includes other types of metrics. You might be looking at maybe, is it a CPI, Consumer Price Index?
I'm looking at the US inflation rate,
So there's a
So-
few different indicators for the inflation.
right? But you ruled out some key things to that. So what I'm saying is metrics are metrics and data is data, and it can be written and it can be incorporated to reflect whatever the person writing it makes it reflect. So what I want to know is whenever you're putting this together, the data, what are you trying to get? What are you trying to tell us? What are your objectives? Because you could take this home tonight and make it come up with report something different tomorrow.
So this is based off the Bureau of Economic Analysis, and this is based off of year over year. So this is a comparison a year ago. So these numbers were as of December 2023. So in comparison to December 2022. So these aren't month over month. This is a year look back. So depending on where we're looking at this, it's going to be a different number. Does that help? I could follow up with the month over month if that's helpful. Okay. So focusing on the Fed for a little bit here. So I won't read every word or line on this, but based on the Fed meeting minutes here, I think the questions that we all have for the Fed is how long are you going to keep rates this elevated and when? I think that's also the question of when will they start cutting rates. And as I mentioned before, with the Fed projections, they may be cutting about 0.75 or 75 basis points at the end of 2024. And their long-term goal is to get down to about 2.5 over time, of course. And being that this Fed, they are very data dependent and they continue to say that they would like to see every month or every so often when those economic data is coming out before they make that next move. So this chart is showing the US Treasury yield curve. So these are all the different yields plotted over different maturities here. So if we look over the past 15 years, you could see in the shaded baby blue area of how much rates have moved, right? We know that after the pandemic, they cut rates and then they started raising rates very, very fast over a very short period of time. Oh, I'm sorry. So when we talked about the inversion of the curve, you could see on the very short end, that's where the Fed mostly controls the short rates, right? So as they increase so fast over that short period of time, that shorter end of the curve picked up a lot quicker than the longer end of that curve. So let's say you invest in something like the LGIP, which you do, you see those rates reflected faster because that investment vehicle has a quicker turnover rate as those securities in that portfolio matures. And as interest rates change, now this is just a point in time, right? So if we compare, let's say December, that solid blue line to the dotted blue line, which is September, rates did fall. The reason being is, let's say 2 years and out 30 years, that yield curve reflects investor sentiment. So what is the investor willing to pay at that point in time? And if they think that the economy is going to achieve that soft landing, they're not going to be willing to pay a higher rate if they think that the Fed is going to be cutting rates at that time or in the near future. So I'm going to be going over the portfolios. If we look on slide 11 here, so this is an overview of both the portfolios. Right now, there's 2 different portfolios being managed. One is for the general fund, the second is for the capital fund. And if I take you over to the right, looking at the sector allocation, this represents the diversity of the different security types that you have in the portfolios across 2 of them. And you'll notice here that a majority of them is invested in the US Treasury. The reason being is because of safety, right, and liquidity. So let's say Randy or Donna, you all need cash from that portfolio. If you were to call us up, preferably before 10 a.m., we would be able to sell that in the marketplace very easily. And that is why we keep a good amount of treasuries in the portfolio to achieve those 2 objectives that I mentioned earlier, safety and liquidity. And if we go down to the bottom there, looking at the maturity distribution, we are managing to a 1 to 3 year investment strategy. So you'll see that in aggregate, the weighted average maturity is about 684 days, and a good amount of those portfolios are in the 1 to 2 and 2 to 3 year bucket. So if I take you to the next slide, on slide 12, this is the details of the portfolio. A few things I don't mention here. How we manage the portfolio is an active management type of style, right? So we follow a 1 to 3 year mandate. So that's about 1.76 years in duration or average maturity, let's say. And we will opportunistically sell something if we think it's lower yielding, if we could pick up something that's higher yielding. All, of course, all under the Code of Virginia and all well in line with your investment policy. And two things I'll note: if you see the difference between yield at market versus yield at cost, your yield at market demonstrates that if we were to buy the same securities in today's marketplace, now this is as of December 31st, that is the yield that you would get. But because we've been investing over time, your yield at cost represents when we bought that in time. Now, these rates were lower when rates were lower, but over time, as we're introducing higher yielding securities into the portfolio, and if you've looked back at past quarter, you'll continue to see that yield at cost continue to creep up to the yield at market. And I will say right now, it's going to be reverse. So when the Fed starts cutting rates, we'll probably start seeing rates fall, right? But you're going to be positioned well because there's going to be securities in your portfolio that are going to be a bit higher as those rates tend to fall. So looking at the general fund, I will say also when I'm describing the general fund, this is also the same as the capital fund. It's just aggregated separately because they're two different pots of money. So for the general fund, there's about 9.6 million. I mentioned duration earlier, so we are a little bit short of the benchmark. Now, this is strategic because if we are still in an elevated interest rate environment, we want to take advantage a little bit of those shorter term rates, right? And that's reflected if I take you down to the bottom right-hand side, where if we compare the portfolio to the benchmark, we are investing in a little bit of shorter securities into the 0 to 1 year space. As I mentioned earlier, looking at the upper right quadrant, the sector allocation, well-diversified portfolio across the board. And then looking at credit quality, all AAA or AA. Now this is S&P ratings as well. And I do want to make one note here. When the rating agencies put a rating, that's merely their opinion. We have our own credit research team that whoever's on our approved issuers list, we do rigorous credit research on that as well. So issuer diversification, so this is a great snapshot if you're looking at who you're actually invested in across the different sector types and also the issuer names. And you'll notice that not only is this in line with Code of Virginia, but also the investment policy. And I know we worked with the county. So when we think about Code of Virginia and the permitted investments, it's pretty liberal in a sense where there's sometimes not any parameters around specific securities, but we've worked with the treasurer to rein that in and make sure it meets, your risk tolerances. So looking at portfolio performance, so when we pick the 1 to 3 year strategy, we want to compare it to some sort of bogey or some sort of indicator here or some benchmark. So if we focus on the third quarter, because this is an active management strategy, we take into account total return. So total return incorporates not only your interest earned, but also the change in market value. I mentioned earlier, if rates come down, that market value, it has that inverse relationship. So because rates came down a little bit in the fourth quarter, you saw the change in market value go positive because that's a market value appreciation. And then if we look at the portfolio versus the benchmark, we did slightly outperform on a gross basis as well. And I will say, and I'll end my remarks here, with rates rising so quickly over that short period of time, it threw a lot of portfolios. If anyone who invested in fixed income securities, they had negative market value because of that inverse relationship. But the county stayed the course. They didn't miss out on the upside when rates were rising, right? If we're investing opportunistically, we're slowly introducing those higher yielding securities into the portfolio. And also having a diverse investment policy as it pertains to permitted investments, that has also helped with return as well. And next steps, since we are still in that elevated interest rate environment that I've mentioned earlier, we are working with the county to conduct a cash flow analysis. Cash flow analysis takes historical balances over a historical period of time where we can identify a core balance. So that set of funds could be invested out a little bit longer because we know those funds will not be touched. Or another option is for the short term, we could open up a short term type of vehicle too, knowing that not investing in a 1 to 3 year strategy, but maybe under a year or under 6 months just to segregate that. Yes.
Yeah, just quick question. There's a note at the bottom here that the benchmark is based on the 1 to 3 year Treasury for Bank of America.
Yes.
It's their benchmark.
Correct.
Have you done any analysis on how we compare to other localities in Virginia and their investment strategy?
So what I can tell you, there were some localities who were more restrictive in their investment policy. I'll give you an example with credit. They did not want to invest in commercial paper, CDs, or corporate notes. Corporate notes you do have, they did not perform as well. So I think having that diverse investment policy has really helped with performance.
Okay. Thank you.
Sure.
Does anybody else have any questions on before she continues on? Mr. Stats?
Just one jumping, oh Lord,
Sure.
sorry.
It's okay.
Jumping back a couple slides to the diversification,
Sure.
one slide, I think. Can you explain the African Development Bank and the Asian Development Bank?
Sure. So in Virginia, these are called supranationals. Not anywhere else has these restrictions, but in Virginia, only 3 banks are permitted. So that's the African Development Bank, Asian Development Bank, and the World Bank. So these are, think about them as large financial institutions that are created globally, and they finance different items like environmental concerns or poverty or things like that around the world. But these are in US denominations. So we're not investing foreign money or anything like that.
All right, thank you.
You're welcome.
Do we have any other questions before she continues on? All right.
Okay.
Thank you.
That was all I had.
Oh, okay. Do we have any, now since the presentation is complete, do you have any specific questions on the presentation? Or more questions you'd like to ask? Mr. Gregan?
How do you guys, how are your fees structured? Like how much do you take out of our returns, I guess?
Sure. Here, let me go back to the performance page. So how we work, since this is an asset management firm, when we do active strategies, it's more of a tiered basis. So under a certain threshold, so right now, the total amount's about 22 million. So the first 20, I think it's structured, the first, is it 50 million? It's 8 basis points, so 0.08, and then it's tiered. So when you see the 3 months, it's only for that quarter, but for the year, it'll be about 8 basis points or 0.08.
So, ma'am, that's a good question. Thank you, sir, for asking that. Why? Because the policy right now allows us to have up to 30% of our investments in CDs.
Okay.
Okay. So realizing that since October, CDs have been higher. I mean, the current rate that you can get on a short-term CD is over 5%. And based on 20% being invested in CDs, we're losing out. And the current that you had on your slide was 4.42% on the other funds. We're losing money. And
so with the longer term strategy, I could bring you the analysis that shows that longer term strategies do outperform the short term. So depending on what is available in the market, of what we can introduce. So just this past quarter, even though they weren't CDs, right? It depends on the supply in the market, what issuers that we've vetted that we feel comfortable with investing in. Give me 1 second. We were able to buy securities at about 5.25. So as we're slowly, if they're maturing or if we want to sell them, and
so you bought at 5.5.
5.25 yield
right.
security. So it's going to take a little bit of time for us to introduce the rest of the securities in without selling, because if we would sell everything, it may be at a loss. So we don't, we want to take into the consideration, the realized losses
But
as
the
well.
thing is that long-term strategy doesn't allow us to take advantage of the short term, the opportunity right now, short term to make money in our CDs. So if our money's tied up in long-term strategies, then
So-
we're not
I'm sorry, go ahead.
able to take advantage of right now, the rates have been high since October.
Right. So we are slowly introducing those higher yielding securities, slowly,
Yeah,
because
but
we
by then,
can't
the
sell.
Fed announced this morning, I think it was this morning or yesterday morning, that they're going to be lowering interest rates.
Correct.
So it's a little late to be getting in. We should have started getting in like in October, November.
So we have been slowly, because of the investment strategy in place, because it's longer term. So if we look on slide, give me 1 second. If we look on slide 12, you see that there's about 1.5% in the 61 to 90-day bucket, and then 12% in the 180 to 1-year bucket.
So our strategy doesn't allow us the flexibility right now to take advantage of the short-term yields, is what you're telling me.
we
And
are,
the strategy based on the county guidance is 30% in CDs. But what you're telling me is we have 20% in CDs, not 30%.
we don't own any, I don't think there's any CDs in the portfolio right now. We have 4% corporate notes.
So we're not following the county guidance. I just read it. It said 30% in CDs.
So that's probably the maximum that we could invest in. So it's a permitted security, but maybe at that time there wasn't supply or there wasn't value added. And what we do use as, I'll call it a bogey, let's say if we look at the US Treasury, right, that's a good comparison. If we look at negotiable CDs and we feel that the county's not being compensated for taking on that additional yield, if we could just buy a treasury, the difference between the two, it may not be worth to buy the CD at that time.
Well, I can understand not buying if they're low, but we don't have the flexibility. If we don't have the flexibility, or maybe somebody's not watching the market closely enough to be able to take advantage of it.
I think, if I can jump in,
Sure.
I think she's playing, she's trying to do a balancing act between risk and yield. And so she's taking a slightly more conservative approach, which means we may get less of a yield in the long run, but we also incur a lot less risk than we would, say, if we started buying a bunch of short-term things and the rates change dramatically.
Right. Well, CDs have multiple.
Is that accurate?
Yeah, but CDs have multiple durations, and the county policy, the reason the county adopted a policy of 30% is for the risk mitigation. That's in the policy.
Hold on, let's clarify what Mr. Jones is. Usually we've been very conservative, correct, as a county?
And there could be down the road, as we are actively investing it, that we would purchase in negotiable CDs. But I think at that time, if it's not, I mean, it may be high yield, you're correct, but maybe we don't want to take on that quote unquote credit risk because maybe a US Treasury may be yielding similarly in the same maturity bucket, but we would rather take the Treasury over that CD.
So, Ken, to follow up on that, I think my overall question is, how actively are we managing this portfolio, or how actively are y'all managing it?
So
What I'm most struck by, truthfully, is given everything that's gone on in the last 4 years, we still only have 4% of corporate notes. I would have expected that to have been a lot higher to try to capitalize on the collapse of 2020 that everybody knew was going to rebound within months.
So we could show you historics if that helps, because the portfolio does change over time in every quarter. So we do have portfolio managers on the desk. They're actively trading every day. Not saying that they're making trades every single day, but they are active in the markets and seeing what else is out there. And maybe at that time, again, depending on supply of what's out in the market, what's actually approved on our issuer list, we want to be careful on what we want to introduce into the portfolio. So I could follow up and provide information.
Mr. Stats?
Following back up on the Asian Development Bank, is it true that the Asian Development Bank has a troubled past in human rights records? Isn't it a very troubled bank and that has had problems since 2008?
I cannot speak to that. I'm not sure, but I will be happy to follow up with something. I know our credit desk does their own credit research, as I mentioned, and we could follow up with our observations. And I do want to let y'all know, if there's an issuer in here that you do not like, we could always remove that as well if you're not comfortable. It's whatever everyone is comfortable with.
If I got a list of more questions or maybe some securities, you'd be able to answer it, and then we could send it out to everyone.
Yeah, I could do that. Absolutely.
Is everyone willing for that? You can send some questions to Ms. Fisher. Is that okay if they send questions to you? You could collate the questions, and then we can send them to you or Mr. Jones
Yeah, that
to
works.
get to you, and then have them for maybe, how long do you think you'd take to get that by next budget, next
Oh, yes.
week?
Yes. Yep.
Does anybody have any more questions to add so she can find out about?
Would it be better just to write it all in an email instead of us going back and forth each, getting it all?
That's
in an
fine.
email?
That's too. I'm just asking right now since she's here. So if you think of anything, we'll just send it to Ms. Fish and we can get them to you.
Sure. That works.
Mr. Stroud?
No, ma'am, thank you very much for coming tonight, because I know
Thank you.
that's a challenging job.
That's okay. Ask
So-
questions. I mean, this is your portfolio too.
Yeah.
So
How many people are managing our portfolio from your firm?
So we have a portfolio manager, Brian Robinstein. He's focused more so in the Virginia sector because of the permissible investments that in Virginia you're allowed to invest in. So if he's not on the desk, there's a backup, but there's multiple traders on the desk at all times.
Thank you, ma'am.
Sure. Thank you.
Thank you very much for a nice
Thank you.
presentation. I appreciate it.
Thank you.
All right. Hold on a second. Next up is, we just have discussion. So where does everybody want to start? Since I wasn't here the last time when I was online and I kind of got thrown into this today. What was the will from the last meeting of where you wanted to start this discussion? We can do it many ways. We could just bring up topics. We could go through the big binders of paper and start by each section. We've done that in the past. Where does folks want to go? Mr. Stats?
So from my understanding, since we did not finish all from last meeting, my understanding was the will of the board was to move what we did last meeting and start doing this meeting, which would mean the operating budget request, and then circling back to the new request, position request, and looking back and having a bigger discussion on those two items, and then eventually moving on to the binder.
So I asked for clarification because my internet cut off at the end, so I didn't see the very end. So we can start with the bound packet of the outside agencies.
Can I ask you a question real quick?
Yes, Mr. Sullins.
I apologize. Going back to the beginning, and the reason I do this is because I've had a couple emails and about people voting for various things. Going back to the voting for the consent on the agenda, or the minutes from the previous meeting. Did Mr. Collins get to vote? I didn't hear his voice. I just want to make sure that that's on record.
He is not. He emailed me earlier and said that he is not even able.
He's not going to be able to dial it.
He has laryngitis.
Yeah, he sounded awful last night, so
So-
he'll feel better soon.
Normally, and so I don't think he'd be able to. Did he, Mr. Dines, did he ever get online?
Madam Chair.
He might be feeling under the weather, but thank you, Mr. Sullins. So let's take out our packet of the outside agencies. I feel like a school teacher here. So, and I'll start, has everybody been able to look at all of the big packet? So I'll circle around. I'll start with Mr. Sullins. Is anything, so now I'll just give a brief what we used to do in the past. So in the past, we would get just the major piece of paper there, the first piece there, and then we would, the board, there was the state mandated agencies that were required to fund, and then the outside agencies, we'd ask people to come in and give presentations. A couple of them did yesterday give presentations, so we could look at that list and see what we're interested in, more presentations, or we could have a discussion on each one individually and just go down the list. Since a lot of you are new to the game, how would you like to go? And Ms. Han?
May I interject something here?
Go right ahead.
So the one agency that came last night, Love Thy Neighbor, I believe this is the first time that they've ever even thought about asking for funds. So generally, outside agencies apply through EC Impact. It's the cohort that the county joined many years ago. So their information is not in this spreadsheet. If you'd like for me to add that to the spreadsheet and update that, I believe their request was like $34,500 from last night. Is that what it was? So the bottom line number, if you want to add them to this, is going to be $34,500. approximately more than what's in the spreadsheet now.
Thank you. So could you add that in there and send it out? Thank you. So I guess we'll just, Ms. Hahn, could you inform the board of what the state mandated agencies are and just point them out on the spreadsheet for us, please?
So at the bottom of your spreadsheet there are several agencies that are bolded in bold. And so either by state mandate or by our locality and participation in these different agencies, we are mandated to support them as they do provide services specifically for King George County. And so all of those at the bottom of the list, and they're in bold, those, they're not discretionary. We can't say, no, we don't want to fund that. We have to fund those.
I will add on to Ms. Hans, a couple of these, we can reduce the amount we give them because it is, you know, it's an offer of it. Like George Washington Regional Commission is one, the FRA, they are ones that we can change the amount we give to. Mr. Stats.
But for instance, for the FRA, it's not like we can just do zero, just hypothetically.
I don't think so, but I would have to get clarification on that.
All right, thank you.
Ms. Hahn, I don't think so either. It's just you can change the amount.
So I had not heard that about changing the amount.
I know that for a fact because for George Washington Regional Commission, I've been on that since 2020, and it used to be Spotsy didn't give their full amount. So I know that is possible. And they do give their full amount that each one is required or asked to give, but they for several years did not give their full amount. Go ahead, Mr. Kingman.
Are we able to see the amounts that other localities are contributing to those? Do we have that information?
So in the one packet of information, it breaks down what the budget for each locality.
Okay.
I only printed ones that, because there are other, because like I said, it's a big cohort that uses EC Impact, and so there are some agencies that King George is not offered services for that are up in the northern parts of the area. But in those packets, it will tell you how much is requested from each agency. Now, I don't know whether, you know, what the amounts that are actually funded by those agencies. It's possible going out and perusing their website, we might be able to see which ones they do fund and how much.
That's what I was kind of looking for, is how much are they actually contributing?
And, you know,
those Spotsies, you know.
Yeah, and so possibly looking at their budget.
Okay.
George Washington Regional Commissions is online.
Okay.
And I think it was in the November meeting where they had the breakdown of what they're asking each locality to contribute.
Okay, thank you.
That's the only one I know off the top of my head. And then also too, one other thing, I'm also serve on Healthy Generations, which is the Rappahannock Area Agency on Aging, a long title. But you can also contribute more if you feel that the services are needed, because I know like Caroline gives more to Healthy Generations than they're asked to give. So I'll just start down the line. Mr. Solons, did you have any thoughts, concerns? All right, Mr. Stroud?
No, ma'am.
Mr. Davis?
I do not.
All right, Mr. Kingman?
No, not right now.
Mr. Gregan?
The FRA and GWRC, are they mandated by the state for us to give that amount, or how does that work?
I do not have, Ms. Hahn, do you know that off the top of?
So we participate in those. We sit on the boards. It's an active participation by the county in those agencies and sharing of services and everything. So those, because we are affiliated with them, it's what they call an intergovernmental type agency, and that's why, and within our, I think there was some discussion last night's board meeting also about the planning district that we're in. So right now, being in the planning district 16, these are the agencies the intergovernmental agencies that we are affiliated with and participate with. Okay. And that's why they're mandated.
So it's because we're members currently? Is
We're,
that
we're
why?
members, and we have, some of our board members sit on those boards as well.
So if we decided to not be members, then we would not have to.
I believe if we're in that planning district, we have to participate with whomever is in, whatever intergovernmental.
And then
But I'm not positive about that, so I don't want to say definitely, but I know that we are a member.
We do not have to participate, but we have a cost benefit trade-off that we need to, address there. I can't speak to all of it tonight, but there are some.
Mr. Boyce spoke to us last night, and he explained that at least last year, the amount that we contributed to that, King George contributed, was $17,383. And then he provided kind of a rundown on the various services and things that we get from that. I've heard the number 21-to-1 return on investment ratio, but that's across all of GWRC. I've asked him if he can quantify that specifically for King George, based on what we put in, what do we get back out of that? So far, I've gotten mostly kind of the list of services, but those are fairly substantial.
And one big one that GWRC, at least through FAMPO, which is their transportation wing, is they do provide us as a rural locality transportation planning. So what we submit to Smart Scale, because we do not have somebody on staff that can do that kind of detailed engineering and study to put in for Smart Scale applications for road projects. We just don't have the population to support that position. So they do, that is one advantage that they can provide us, because they are able to afford an engineering transportation planner. Mr.
I believe, so there's a benefit there, but we don't get the benefit of, I think, the state funds and these other funds if we don't participate. So the numbers are in that brief that we received last night, and like one of the projects is like $80,000, $88,000 for, I think, Caledon Road. There was some work for Millbank, some stuff for Port Conway. So.
If you want to take offline, I can explain a little bit more about it. Mr. Windsor?
I see in their paperwork that we actually gave them, they requested from us $29,300 last year, but we actually gave them $20,425. So this number we have here, is this their number they're asking this year, $25,454? Or?
Yes, and it's based on population too of the locality, and they asked for an increase this year because one of the challenges they had before was being able to pay and meet payroll on a timely fashion, because the way GWRC, they pass through a lot of grants, and not all grants come like every month. Sometimes a grant comes every 6 months. So Stafford was helping them be able to have a 60-day cash flow, Stafford County. So by doing what they've been doing, they're actively making it so they do not have to use Stafford as a backup in case the grants don't come in. So they did increase it a little bit to help fund their organization and make sure that it could be, have that rainy day fund, and to also be able to do the helpful services and have the talent pool to help the localities. Mr. Windsor?
So this number is really negotiable. I mean, this is something we can say. I see where they asked Spotsylvania for 115, and they actually gave them 78,000.
Yes, it is negotiable.
So obviously they're going to take what we offer on that. Right?
As you saw, Spotsy doesn't always.
Thank you.
Traditionally. Does anybody else have any questions? Mr. Stats, and I'll get to you, Mr. Moffitt.
So I had a follow-up question to that. These developmental zones, are those state-assigned developmental zones? So you said we're in developmental zone 16 or something? Or planning, sorry.
Planning District 16.
Okay, so that's like state.
That's the state.
Planning districts were set up about 60 years ago by the state of Virginia, and they haven't really been looked at. They're supposed to be looked at soon, but they were set up a long time ago. And when ours was set up, we kind of matched the other localities, but it's 60 years ago. So, and it was supposed to be a regional approach to help to work together for a common goal.
Madam Chair, may I? So also the packets that you have and that you were looking at there for like GWRC, there are 2 different programs. So one of which, so I'm thinking you're looking at the total amount that was given, but there's 2 programs. One is per capita, and that's the the amount that you probably have to contribute. And then the other program under, for them is unsheltered homelessness. And so that's probably the one that Spotsylvania isn't contributing to. So you have to dig deeper down into the packet of information. You have two sets for GWRC, one for the per capita, one for the unsheltered homelessness. And both of them start off with the full budget and then drops down into that program further in the information sheets that you have for that particular agency.
And I will add to the unsheltered homeless part, because that has been a contention at our meetings for a year, is, and you heard the gentleman from the Thurman Brisbane, there are two models. There's the HUD federal model and then the Thurman Brisbane model, and they kind of conflict. And like the Thurman Brisbane, that's why they seek other funds, because the federal model doesn't support them, because the federal model is housing first. And the Brisbane Center uses the model of trying to help people have a better life to get to be not come past. And it's very conflicting, and that's where some of the issues come. And that's usually why the Thurman Brisbane asks for a little bit more. Go ahead, Mr. Stats.
So someone's going to have to say it. I will. We all have to look at the total cost at the end of the day. Every single one of these organizations are honorable, very good organizations. You can't say one thing bad about them. But at the end of the day, King George is at a place financially where we have no money to give. And it is coming to the point where if we keep giving to organizations, again, every single one of these is a great organization, but we are reaching the end of the point where we have overtaxed our citizens for generations. And now we're hitting a point where the generational resident of King George is forced to leave because they can't afford to live here. And so, yes, every single one of these organizations is great. And I think we also have to ask ourselves a bigger question. Is it the government's place to give to organizations? You know, why are we taking the people's tax dollars and then spending it the way that we want to? Should it not be the citizens' responsibility to make their own money, then give to the organizations they find responsible? You know, I think one big part of this conversation we have to have as a county is, you know, you can't have the cake and eat it too, you know, and we're going to have this conversation when we look at the new positions. You know, we have tax our citizens. We can't tax them anymore. That's not an option. And so you're going to have to make tough calls, and looking at this sheet, every single one of these are a tough call. And so, you know, I just want to remind the board, you know, when we look at some of these organizations, you know, it's kind of, okay, we give to X organization that is now money outside of King George residents that they could have had in their pocket. So just some thought while I was looking over this.
Thank you, Mr. Stats. Mr. Moffett. And I did get to your last name right? Correct? You can correct me. It's okay.
I answer that as well.
I have a last name that people say wrong all the
It's
time.
technically Maffett.
Maffett. Okay.
But
Thank you. But
I'm over it at this point in my life. So these Fredericksburg and the discretionary funds, the Fredericksburg area organizations we give to, do all of those have an actual presence in our county? Or do we just give because we're in the satellite?
And I know you just got your packet tonight.
I did.
So if you read through that packet, it will tell you what they have done for King George County.
All right.
and some of them we have not traditionally funded in the past. They just put in the portal every year, and it's whether our choice whether to fund them or not. And then a couple.
Whether we fund them or not, they do still provide services to King George.
Right, and there's some in these bold that I definitely tell you can provide services.
So generally speaking, yes, they're all operating within our county.
Mm-hmm. In some form or other. Mr. Windsor?
Just to follow up, Mr. Chairman, this is like 0.5% of our total budget, what we're looking at on this page. If I'm correct, we have 115 million some odd dollars.
That was last year's, yeah.
Okay, I'm sorry, I don't, but this is the total is, you know, I'm looking at a total of 422, 532, or 548. Either way, we're at 0.5% of of our real budget. Looking at this, I think, and I agree with what Anthony says, but in my opinion, this isn't the problem in our budget. And I would think that King George could support some of these. You know, I mean, I'd give personally to most of these. You know, but you know, I don't think this is where our problem's at. I mean, I think obviously we should support the homeless shelter. You know, the gentleman said we get 11 to 19 of our citizens there a year. But, you know, we can look at this, and it's very good that we have this information. Thank you, Ms. Hahn, but this is not where we need to be debating, in my personal opinion. Thank you, Ms. Butler.
Thank you, Mr. Windsor. I'm not disagreeing. In the past, what we would do is go down and figure out which ones we didn't want to fund because they didn't provide a lot of services. We could do it that way. A lot of you are new on the board, so I just wanted to, because we would go down and say, well, that one doesn't really do much for King George. Like one we struck off last year was the Fredericksburg Animal League because we wanted to support our own animal shelter first. So we could, you know, cut a couple off, or we could have them actually come and give a presentation to show why, you know, they're. Anybody else have?
Yeah, I agree with that. As far as like, even like, I know the Fredericksburg Regional Food Bank is kind of, it's good. It's not that much money, but I'd rather see that even that money go into our own food bank that we have here, which seems to be supplying to people in Fredericksburg already, according to them yesterday. We had Love Thy Neighbor come here and talk to us. I'd rather be dumping into our own resources.
Mr. Stats?
So I will say I did talk to the president of Love Thy Neighbor, and I kind of presented him with that exact scenario. If we were to allot Love Thy Neighbor with the money that we give to the Fredericksburg Regional Food Bank, what would he think? And he said that they get so much of their food and so much of, for instance, they had gotten a fresh meat vehicle where they could store fresh meat from the Fredericksburg Food Bank. And so he said it's actually a net positive to get Fredericksburg Food Bank the money because they get more in return than allotting that money to Love Thy Neighbor. And so if we are, I really do think we need to give Love Thy Neighbor money. I think it's been horrendous. We've never given them money, but I would not advise taking it out of the Fredericksburg Regional Food Bank budget.
Thank you.
Thank you. So we can go down the list and just strike off some that we want, because then Ms. Hahn can redo the list, because that's what we've done in the past. And that takes a little bit of money off. So is there any here that we can say that, you know, we might not want to support? And they're all good charities, but you can't support all of them. And we have not traditionally in the past. Go ahead, Mr. Stats.
I'll be the first one, the Fredericksburg SPCA. That would be the first one. It's just a lot of money. We don't have it. So.
How does everybody feel about that one?
I concur with that.
Okay, so can we remove that, Ms. Hahn? Is any other one that strikes out? Now, in the past, we also take some off. They bring back the list and look at what the budget numbers in, and then we cut some more off. So, Mr. Windsor, I saw you.
I think.
I'm sorry. The church, is it Micah? Is that pronounced? Micah Ministries. Why are we giving them money?
And Micah is the rival to the Thurman Brisbane. They follow the HUD model of the, and they're creating Jeremiah Village, which is the village to house unsheltered homeless. So we do not have to give to one or the other.
Yeah, so we have one, so we kind of have redundant request right here.
Mm-hmm.
Kind of, but not different. When we got the brief from the gentleman from Thurman Brisbane last night, this is my characterization, not his. These are my words, but one serves kind of as a safety net. The other one serves as a bit of a launch pad. The launch pad, they don't accept everybody. They limit based on health, mental health, criminal activity, things like that, and they turn people around and get them back in the job market. Some people just simply can't be turned around because of health problems, various other problems. That's where the safety net comes in. And I think that's the distinction we're working on here. So it's not really a duplicate effort. It's very similar, but different still.
And I will also say that in previous years, I know when I first came to King George County, they had not supported anyone from King George. And I see in their application that they are showing more people from King George using the services, where in the past they hadn't.
Mr. Stroud?
Well, yes, that raises another question, so I'll mention it quick. Is there, all these people that say they're supporting, because whenever people come in and brief us, and this is just an open thing, they come in and brief us, and they're showing from where the people are coming from. I don't know where the verification is on that. I mean, we got people crossing the border without an ID. So whenever people show up, do they have ID? How do they verify that? I don't know. Whenever they're outside, organization, King George Social Services, completely good with, but somebody else who's coming in.
They just require that they state their last address. And so if they identify an address in King George, they are identified as a King George resident.
They could have read that on the way to the facility. I mean, I don't know. I'm just being, but that was just my thought. As we're going through this too, guys, I would offer up that maybe if we don't contribute all of it, maybe you decrease. I mean, you could say 10%, or if you want to add to somebody else, maybe you do a 10% cut, or I'm just offering up other things. So it doesn't have to be all or nothing to that as well, whenever we're looking at it.
Yes, we could change. We don't have to do the full request. We could give a little bit to everybody. Mr. Franklin, would you be able to come and give us some more clarification? If you're not, you have a little more background than a lot of us, so.
Share. So I know the homelessness it's a very complicated topic. So when you talk about residency or last place of residency, even our office struggles with that. I mean, we have very formal requirements. You have to be verified by state issued government ID. But many individuals who are homeless won't necessarily have that. What other questions or concerns are there?
Mr. Stroud?
Well, I would say that whenever it comes to the care, we really don't care. We need to take care of the person. We need to care for them. Where it comes into play is whenever people are asking us for money, and we have no control over whether they say, okay, whoever's asking for money could say, well, yeah, there's more King George, there's more Stafford. We don't know that part of it. But whenever somebody shows up to your door, you have to care for them. Right. So, and I'm not saying anybody's, it's just data. So.
Mr. Stats?
No questions for you directly, just kind of another comment looking at this over again. Germana's request is almost identical to how much Love Thy Neighbor is requesting. I would advise the board, or just kind of open the discussion to moving how much we would have given Germana to move that fund to Love Thy Neighbor.
Before that, does anybody else have more clarifying for Mr. Franklin? Mr. Windsor?
Yes, sir.
So if I'm homeless in King George, what's my first step? Do I come to you? Is that where we start?
So many people do, and we refer to all of our partners on that list.
So these two that are on my list here are definitely partners of yours.
Yes, right. And so the primary shelter and homeless intervention services that we work with are Empower House. Now they focus on domestic violence needs, but they have a critical shelter. Lois Ann's Hope House, they primarily target families and caring for families. And then Micah Ecumenical Ministries, which really focuses on chronic, very difficult, unhoused situations, like mentioned before, severe mental health or substance abuse, things that are barriers to getting into other traditional shelters like Thurman Brisbane, which has a much more, they just have a very different protocol. And all of those, especially Micah, Empower House, and what was the third one? Lois Ann's Hope House. They're partners in what's called the COC the continuum of care, which is housed under GWRC, George Washington Regional Commission. And they're not competitors, they're partners, and they just serve different populations.
Madam Chair,
Mr. Solons?
sorry, I'm going to kind of shift gears a little bit. The last meeting, we had somebody from each one of the departments to go through and explain what the additional billet was for and why, kind of a justification. Can we get somebody to just kind of go down this list? It doesn't have to be like a 5-minute spiel on what everything is, but just kind of give us, right now we're doing popcorn. We're all over the place with, well, what's this, what's that? Can we just go down the list?
We could do that right now.
Yeah.
I mean, and we
Be
can
awesome, 'cause
discuss it.
I think there's a lot of things on here that we're not familiar with, and I think we're probably prone to, well, let's cut that without really knowing
That's
what we're
fair.
doing.
And I'll tell you in the past, Mr. Franklin, thank you. In the past, we've had a county administrator to shepherd us through this. So I'm just using my experience from sitting on the other end. So we can go through each of them. And Ms. Hahn, you can help me out because you probably have the screen up there. I got the big stack, but you got the screen. So the American Red Cross, what do they do for us? If you could just give us like 2 sentences, a minute, 2-minute spiel.
And I do apologize if I put y'all on the spot. If you don't
No, that's
know,
all right.
no harm, no foul, but some of these, we have no idea what they are.
In fiscal year 23, they provided $1,030 in immediate financial assistance to 2 families or 6 individuals for following home fires and other disasters in King George. And since October, and I don't know why they have 2014, but they have installed 11 free smoke alarms in 5 local homes. They partner with emergency management and other local partners to conduct and practice large-scale mass care disasters such as evacuation, sheltering, and feed operations. So that's the short of what they have listed for King George in the packet.
How about the Disability Resource Center?
All right, so that one I had gotten pulled up, so it's going to take me just a second. And then I have to scroll down to find King George. So they worked with a 20-year-old man on the autism spectrum who is transitioning out of the school system. Due to his lack of transportation, the staff member has met with him in his community, either his home or the local library. She's been helping him with job exploration and interview skills. He wants to work with his hands in an effort to help him understand the possibilities that are available to him. We connected him with a member of the board of directors who owns a store that refurbishes furniture. And by visiting the store and meeting with the board member, he's been able to see how he can apply his skills and creativity in the real world and recognize a path to employment of which he was previously unaware.
This might be tedious, so maybe a better.
And that's why in the past, you would go through and select some of them, and they would come and do a brief presentation at a budget work session about what they have done here in King George County.
So this is on the fly, so that she doesn't have to read the whole list. As I told you, we've had a county administrator that's kind of like hold this and shepherd us. So maybe instead of reading all of them, maybe we can select a couple that we're unsure of that we'd like to come and give a presentation. And we could then do our homework with our big stack for the next meeting and then come prepared to maybe cut some out or maybe reduce some of the money, but give. So how about we all agree to maybe have, you think 3 or 4 might be good, Ms. Hahn, to come and give a presentation that we're interested in, but we just would like to get some more information. Go ahead, Mr. Stroud.
Well, I'm not against that at all. But what we haven't discussed, I don't think, since we started doing the budget meetings, is what is our objectives? And if we set some objectives and we work towards the objectives, it may make our task a little easier. And
I'm not opposed to that. I just stepped into this role today because Mr. Collins was kind of directing this budget workshop. So we could do that if that's will. Maybe number one, I guess, would be to lower taxes, correct?
Well,
or not lower taxes, but lower so we don't have to raise taxes. That's how I'll put it. But let Mr. Stroud go and then I'll get you guys.
Concur. I mean, and it's open forum. I'm not, whoever's got the great ideas and maybe we need a whiteboard or something to start a parking lot where we put things and then we look at it. But we think about what is an objective and is it achievable, and to work off that. And maybe we look at, maybe there's individual objectives and we look at those, and then we can take those individual objectives and come up to a group of objectives. But I think it's one, we don't want to increase taxes. And for me, I've already stated, I ran in, my campaign is to bring business in to absorb the tax burden so that the citizens don't have to. That's not going to happen overnight. And with the budget, though, is one, and I have a military mindset, but it's first, do no harm. So if you use that to the budget, it's like first, do no harm. What that I would think means is you don't increase. You live within the budget you've got. And I think, what is the budget? That's what we're looking at. Well, I think from my beginning is, how much money do I have? Because I can't spend more than the money I've got coming in. So we have projected revenue. If we know the projected revenue, then we look at we can't spend more than that. So if our projected revenue is whatever percentage less than we're looking to spend, then that's our target to reduce, and we kind of go from there. Ms. Hahn, you have.
So here in the county, the way it's always been done is to look at the expenditures. And one of the things we did not do this year, because y'all wanted to see everything, is we did not hold department meetings. We did not look at what could be cut. And so that's one of the suggestions I might have, is that we now maybe put a pause on for maybe not meet next week, but meet the following week and give finance the time to meet with the individual departments and see if there's things that can be cut out of the budget to get those requests down. Of course, the projected revenues, I have been working on those, but that is a difficult task to look at. Like for DSS, there's very convoluted formulas and things that you have to go through and look at. I have to look at his budget and what is approved and what we're not going to cut out, because the funding is based on his actuals in his budget to set up on the revenue side. Sorry about that. Also, I know in his budget, he had a request for an additional position. So those revenues also have to be tweaked based on that if that position is approved. I know his board approved that position, and this board has not yet taken action on that. There are, for the personal property taxes, those are, I can just take and estimate based on last year, but the actual valuations are done through the Commissioner of Revenue's office, and they generally don't do those until March. There are some other, funding caveats there. I've gotten a preliminary land book, but that's not to say that will be the land book at the time tax bills go out, because construction is still happening in the county. So I can project a small increase there, but not much. I wouldn't say you want to go much over what the current land book is.
Mr. Stroud?
Yes, ma'am. So I think, you're targeting the right areas, and you've been doing the job long enough to know that. I think that one thing that interests me is the tools that we're using. I think that we could get better tools to do this, but there are different aspects towards the revenues and expenditures. On the revenue side, our assessments have been, last year myself came in and spoke about it. The assessments are wrong. Our properties, a lot of the properties are way overvalued, some to 150%. I believe are looking towards establishing a board to go back and relook at that, and we're going to have a new assessment, because that last one was definitely wrong. So I personally wouldn't want to create a budget based on aired data. And whenever you look at the tax assessments, in my opinion, there's an error there. So I wouldn't want to create a budget based off false data, and it's wrong. So that's something we need to look at. And I think probably if you look at real estate taxes, go back before the last assessment and pull that data up, and let's use that and not use the inflated last data, because it's going to change. Whenever somebody comes in that does a real assessment and actually does their job, the values are going to go down in many cases across the board. That would be my recommendation there. And it's open for input from people. I would rather end up with more money than I planned on than end up with less money than I had planned to spend. But I have a question that, and if, and this is directed towards Ms. Hahn, to you, and I'm not putting you on the spot, and if you can't answer tonight, then tell us you need more time, but you may have an answer tonight and then come back with a better answer later. But if you, this is something I would ask for my company. I'd ask my finance manager this type question and to get a response. But if I came to you and I said that you need to reduce our expenditures by 10%, then how would you do that?
So I've actually done this, not here in the county, but at James Madison University. I had to come up with a 5, 10, 15. So I look at the areas that if we cut services, if we cut expenditures, would it affect services? Those are the first things that you look at. And then you look at, the last thing I like to look at is the salaries of our employees, because as you know, many of our employees, I believe Mr. Collins mentioned this at the last budget work session, that some of our employees are barely at the living wage now. So that's one of the last things I look at is employees. But I look at, things that are sustainable without increased services. There are a lot of, and that's one of the bad things, is that you have so many things that already have built in the contract. You have built in CPI increases. And you do have the ability to terminate those contracts, but then you would have to put them out for rebid and at the possibility of coming in at a much higher cost. So, those are, where I look at what can we do? What can we live without first?
So that's good. That's like we would do it.
And that's what I do. That's what I normally do with the departments when I have the department head meetings, which this year I was asked that we just come straight to the budget work sessions, present everything. And so now I'm asking for that a couple of weeks to go back to that and do that and work with the department and see what we can cut.
Whenever, like there's a meeting with department heads to talk about something like this, and I'm just talking here. I don't believe that that's, so finance can have that meeting, but to me, it's more than, finance can add to it, but that's a meeting that I feel responsible for holding as a supervisor. Okay, as leader, I would feel responsible for that. And my guidance, would be, it could be multi-tiered, but I would want the department heads, because those guys, gals, they're in those positions, they get paid money to make difficult decisions as well as easy decisions.
And so that's another course that we could take, is that we just start with all the departments and have each department come. You have a work session with some of the departments and have the department heads here and go through their budget. And
so to do that, it's a long meeting and it's very draining. Before we ever get there, okay, what we need to provide guidance to them. And what I don't know, because I'm new in this job, is I don't know what guidance I've had, and I don't know what mentoring and if they've had just thought leadership and people communicating with them about possibilities. So if I, and guys, I don't want to keep you guys up late at night, but if I was having this meeting and I was meeting with my team, it would go something like this. I would say, look, guys, and there's multiple ways of achieving it, and it would be an open discussion. And I would say, look, here's what we're looking at. One, I'm not looking just to come in and say cut 10%. I'm not looking to cut 5%. What I'm asking you to do is I'm not asking you to, don't focus on the dollar figure or the percentage. I want you to focus on efficiencies. If I have to spend more to get an efficiency, I'm okay with that. And that may not make sense to some people, but I may invest in a software that reduces 2 positions. As an example, I've done it before. And because this software allows my directors, department heads, program managers to be more efficient, so I don't need people performing that task because I got software doing it. And now some people may say, oh my God, we're losing 2 people. Well, those people could be possibly repurposed. I wouldn't necessarily say, oh, well, kick them out in the wild blue yonder, but look at where we can repurpose them. But also at the same time, if I don't need them to do something, then yeah, they need to go find a job doing something else. There are the jobs out there. My focus, and it may be, you know what, I've got 2 people that can replace the software. It's what is more efficient. I want people in leadership to evaluate what they're doing. And that also includes them becoming more knowledgeable of what tools are available. It's investing in them. And it may also require me to talk to them and just say, okay, here's some opportunity, here's some tools that are available that we can use. I'm just offering this up to you guys to think outside where you're at today, to step outside that. There are symposiums and speakers and all that stuff. And I'm like, I'm not all about spending money for that. If we can just get together and use our brains and then be willing to look at things honestly. Okay, if we are here representing the citizens of the county, and they entrust us to spend their money wisely, and to do that, we need to be responsible, and we need to say, okay, how can I do my job better? How can I do it more efficient? What innovative things can I do? Okay, to achieve more with less. Okay, and that's what I'm asking them to do. This isn't about self-preservation from a job. Our job isn't to employ people. Our job isn't to keep people employed. Our job isn't to buy software. Our job isn't for that. Our job is to run this county as effective and efficient as we can to get the most that we can for the least. That's what we're chartered to do. And that's what I asked our department heads to do as well. Okay, and if they're not willing to do that, then we need to talk to them more off to the side. But that's the way that conversation would go. And since we're live, a lot of those people are probably hearing that, so they get us listen to this and get that. But that's what I ask them. And if they take that, and anybody can call me, any department heads, I just heard what I said. If anybody wants to talk about it, feel free to reach out to me. We can talk. If they need ideas, we can do that as well. Okay.
Thank you, Mr. Stroud. And that's what you would like to see as a supervisor, correct?
That's correct. That's correct.
I just wanted to clarify.
Anybody up here can share. That's right.
But I know over here would like a couple comments, so I'm going to come back, and then I had a suggestion. Mr. Windsor, I'm just going to go down the line.
Thank you. My 2 questions would be, and Ms. Hahn, I asked kind of this last time. Do we have a true, a current position? Where we are at. You gave me some papers tonight, and I was breezing through them, and there might be one, and I apologize if it is.
So you're asking that is on the human resource side?
Or current county position. What's our cash flow? What's our position?
Oh, the cash flows.
Is that all?
That was last year's,
yes.
Because as I mentioned at the last meeting, because of our financial system and our
I know
audit,
you're going through all that.
And
I'm sorry.
We're deep in budget work, and Ms. Cobb is working diligently to get all of the adjustments, because she has to hold the adjustments and key them each month as they occur. And once she gets that done, we'll have cash flows for the current fiscal year, but we did provide last year's.
Thank you, Ms. Hahn. I know y'all, and you're going through system changes, and I understand all that.
If I can add.
Hold on, Mr. Strong. I just want to clarify on that. One is I learned this at the VACO Board of Directors. We're not the only municipality that is trying to convert out of the Bright system. And there is one municipality that has to put it in 2 programs before they can convert it to make an Excel. And that's how challenging that old system is. So we are not, and you'd be surprised, it's a rather large county. So I just want you to know we are not unusual in that there is other counties that is having these problems with the Bright system.
Yes. So one of the things I'll share with you about the Bright system is that I actually did receive an email from the Bright Users Group today that they've asked the staff at Bright to come up with an expenditure summary. Because like right now, as I had mentioned, the expenditure summary, you can't run one at the until you close the last fiscal year. It just shows the current month, which of course when you can't close it, you can't get your true June. It keeps adding July and August and everything. So they're looking at doing a expenditure summary that shows each month by itself, kind of like what we do with the cash flows. So the Bright Users Group has asked the
manager of
the management of the support at Bright to come up with a report.
I know Mr. Stroud, you would ask, is it something to jump on Mr. Windsor's? Because I want to let Mr. Windsor finish his questions.
You good, Mr.
No, I just wanted to add, sir. So these things are hard to understand. And so maybe I can help with a layman's term because I'm not that smart of a man. But I can tell you, it sounds like an easy question. But I know from my own business experience is that it is very hard to get there. The easiest thing to use, probably the best thing, is to use historical, because on any given day, even the people that bill the county, people, believe it or not, they do work and they don't even invoice. And if you own the concrete company that needs to invoice, if whoever you have in your company doesn't invoice the county, you don't get paid. The county can't pay until you get invoiced. And these are ongoing problems that happen. That's just an example. It's very hard for finance to get a handle on that. I'm not making excuses for them. I'm just saying it is, we can always improve, but it is a challenging thing to get to that.
I was looking through the information. I just didn't know how current we were. And then my second, my suggestion would be, the top 5 or the top 8 expenditures, we don't need to do 400 different agencies in the county. If we could just get the top 4 or 5 in here and one in a night, or, because it's going to be brutal, and let us hear that, and then, and do it that way. Just a suggestion. Thank you so much.
Thank you. Mr. Stats?
So, couple thoughts. First off, I agree with them about the operating budget. I think getting 4 or 5 to come, and I think the board needs to decide on the 4 or 5, maybe as we continue to discuss the ones we have the most questions about, instead of just grabbing 4 or 5 random ones. But I kind of want to jump off what Supervisor Stroud was saying, kind of getting an idea of the reality that we're facing as a county and realizing we can't raise taxes anymore. We cannot raise taxes this year. We just can't. That is the wall that the voters have put up. They cannot and will not put up with any more taxes. 2, our debt continues to go up. Last year, we dipped into the general fund. That should be another goal, is to not dip into the general fund this year. And then 3, we have a communication problem with the budget. And I think this is a systematic problem in King George's. And again, all great work. Average citizen looks at this budget and understands nothing because it's not readable. And for an average citizen, they want to know, where's my money going? Where's the current project and what's happening? And I think, the whole discussion we had at the last budget work session was, should Ms. Hahn have the talks with the department, or should they be out in the public? Clearly we should have a department head come, talk, and go line by line. I just don't see why having Ms. Hahn do it is different from the board doing it, because it's all transparency. We have to be as transparent as possible. And so it almost implies like, well, maybe if the department had to become before Ms. Hahn, they would give a different number if they became before the board. I wouldn't imply that, but that's almost what the conversation is like. So it would make more sense, and this is what we did last budget season. I had the privilege of serving on the last budget. We went through this budget. Once we hit the county administrators, well, maybe I would not use that one as the example, but we had, social services. We had the social services director come up, and we went line by line. It is gruesome. It is hard. Government is boring. Government is gruesome. Government is hard. That's the reality of the situation. And so you have to make tough decisions to see good financial security. And so I would advise the board not to have Ms. Hahn cancel the next budget session. Go through this list tonight, pick out 4 agencies we want, go back. We still have to have the discussion on the new hires, and then start tackling this. And the way to tackle this is to have one by one, each, one's not going to take up the whole night, one by one coming, the department heads, and having honest conversations and open conversations about their budget. I've read every single page of this budget. There are lines that I have questions about, and those are lines that the public every question we have should be out in the public. It shouldn't be that we have to go have a meeting that isn't public, find the savings there, come before, then have another conversation. Everything should be public. We should have the directors come, the department heads come, have those discussions in public. We have months until the budget season ends. It's every Wednesday. I think we have enough time to do that plan. Thank you.
Now, Mr. Stats, jumping off what you said, now in the past, on my years on the board, we've done it a couple different ways. But one of the ways where we would pick 5 departments a year and we would have them come and go through line by line their budget. We also have done where the county administrator calls everything and then we pick some departments to come and then we pick outside agencies. Now we could, and it'll be a lot of work sessions and a lot of hours, we could set up a schedule where we have, these 3 departments come this work session, these 3 departments come this work session. There's another thing that I just learned today because I was on a webinar about budgeting, and Louisa County does this. They have a finance, and other counties do too. They have a finance committee that basically goes through these stacks before it gets to the overall board. And it consists of 2 board of supervisor members, the department heads, and then a couple of citizens that are chosen. And it's sort of a finance committee so they can go through the weeds and have these meetings. And then it makes it more efficient when you come to the meat and potatoes part of the program. But that's something we could look at for the future. But I thought it was kind of an interesting suggestion in this webinar. It was, maybe we should add that. A lot of other counties have more committees to kind of get into the weeds a little bit more, and they include citizens. But I'm just gonna, Mr. Collins isn't here and he's the chair, but I'm gonna try to give a suggestion that maybe we can do based on some feedback. Does anybody else have any more feedback before I give a suggestion? Let me get Mr. Maffitt, yes. I'm proud when I get a last name.
So the first thing is I don't think we can go forward from here, period, unless we have an estimated revenue budget for next year. Because there's no point to putting anything into an approval process or saying yes to new hires if we're not looking at a general pool of money and then subtracting out what we're committing to. Frankly, to do otherwise would be grossly irresponsible. So I think that needs to be priority number 1, and whether that's the 115 million that was listed on the slides from last week, and that's just what we work off of. And anything beyond that we take in this year's gravy that can go into the general fund or the capital fund, and that's perfectly reasonable if we think that's a viable number to work with. I can't imagine it'll go down. And then I had a couple questions just about some of these documents. So general fund monthly revenues, is it safe to assume that state funds are not a part of this?
That they are all included, all funds. This is just for county. So some of the budget that we work on includes the schools.
Right.
The schools is not, I don't believe we.
Yeah, well, schools don't provide revenue.
Oh. So.
Right, so yeah,
that one sheet is not both county and schools.
So general fund monthly revenues.
General fund is just general county operations. That the schools are not on there. So the
No,
state revenue.
This is an operation. This is the revenue sheet.
And that's what I'm saying. The schools revenue, the schools get a lot of state revenue
Right.
and federal revenue, and it is not captured on there
Yeah.
because it's not
Okay,
considered general
yeah,
fund.
then, all right, that answers the question then. When do we see the overall school budget?
So by law, the school has to present to the Board of Supervisors by March 31st of each year.
Okay.
Now, I will tell you one thing on the schools. There are some bills still floating in the legislature that could affect how much we have to fund.
Sure.
So that is also an unknown, and that's why our budget was so late last year, because the state makes lots of mandates, and then we have to figure out how to fund it. And there are still some mandates out there that are still active that might affect our budgeting, and that's something we can't anticipate because it depends on whether the bill passes or not.
That's fair. But by the end of March, we should know.
They're supposed to.
We should know roughly what we're working with.
And Dr. Boyd, I think, is working on an earlier time frame from that. So they understand our challenge, but that's state funding component is all on the legislature. And last year they kicked the can quite a while down the road, and we had to estimate and come up with a budget before they had made decisions. So
And Dr. Boyd came early last year, and so when he comes early like that, it's unknown. You have 3 different versions of the budget, and so he presents all 3 of them. One is what the governor introduced, then the Senate takes it and they come up with their own version,
Right,
and the
yep.
House comes up with their own version. So it's still, when he presents it, it's an unknown. We don't know which one it's going to be,
Sure.
or if it's going to be changed and it'd be a 4th version.
All right, but end of March.
yes.
That by law, they're required to be here by the end of March.
And then the last question I had, well, not really a question, just a suggestion, I suppose. I'm kind of with Mr. Windsor. You know, this is peanuts in this county. I'd rather see us start with the bigger fish and start working down through those line by line. I think it's a waste of everybody's time to worry about $500,000 when we've got multi-tens of $1 million departments that we need to approve. So just my 2 cents.
Thank you, Mr. Kingman.
I had a question related to the school budget. Can we, I mean, we're operating off of everything at this point, off of last year's numbers as kind of an estimate or guidance for this year's. Can we get the school budget from last year and what their expenditures were?
Yes, we can provide that to you.
Yeah, they provided us a budget book last year. Now there is also some SOQ funding. So if you guys like to get really geeky about school funding, the state of Virginia came out with a JLARC study last year about how schools are funded, and they took a deep dive and found out that our model is flawed, and they're trying to figure out how to solve it, because we're one of the worst states on putting the backs of funding the schools on the citizens, where other states actually fund more from the state level. We do not. We rank pretty low in that. And that JLARC study, which you can find online, shows that we have a flawed model that needs to be fixed. But right now, the burden is on a lot of localities to fund. And the saddest part, as I just learned today, is some of the smallest counties, and it has to do with retirees moving into like Smith Lake out in the mountains. They have raised their per capita income up, and now they're required to give more local match. And they're like, how do we do that? We really don't have like a Loudoun County population. And now their requirement, their local composite index is higher than Loudoun County, which is one of the wealthiest counties in the state of, and actually not the state of Virginia, in the United States. I think it's number 5. And they now, like Franklin County is one, they now have to pay more than what Loudoun has. And Franklin County doesn't have the income. It's just that they have some very wealthy retirees that are moving to Smith Lake to enjoy the scenery and the mountain air. So that's also a throw in too that you gotta watch out, for it. Does anybody more on this side have any more questions? Mr. Gregan.
Not question, just some general comment. Thank you for the responses to my emails. I appreciate that. But just looking at it from my perspective, looking at all the numbers, I don't know what we need and don't need. So yes, obviously, I think the department's figuring out where we can cut is a good place to start. I feel like, just in my opinion, just because I have no idea where we should cut. I mean, the way I look at it is, for the community anyway, public safety, education, very important. But I know we have a revenue problem, and I know that's not a short-term fix. You know, maybe there's a long-term fix for that, but we don't have that fixed in the short term. So obviously we have to figure out where we can cut from these departments to if there's anywhere we can cut, to kind of see where we can go from there. Because I don't want to raise taxes either. But I understand that we have to pay the bills also. That's all.
Well, I appreciate it. Then I'll go down the board and then I'll come with an idea of maybe the next meeting, what we can do, a process for it. Mr. Sullins, I'm going to go down the line.
So I like the idea of looking at the big rocks first, and also bringing folks in, bringing the department heads in to kind of go down. What I would ask is, can we get their rundown a day or two prior, so that we're not looking at it real time with them as they're going down it? We've had time to digest it.
That's fair. Mr. Stroud?
Can I go out?
Yes, you can go last. Mr. Davis, would you like to go after my idea too?
I just like to go after you. I just say I concur. It makes it easy.
Or you can go.
I'm kidding. But this is, I definitely don't want to speak to people. I bring people in who we give $3,000 a year to. There's no reason for them to come in here. And we can pick some of the bigger ticket items on here that we have choices on how much we give. I think that's a good idea. I'm kind of done looking at that tonight, to be honest with you. I don't think there's a lot of merit to it right now. I would kind of look at departments. So I've done a lot, and I ran on this. I did a lot of study on the fact that one of the first signs, one of the consistent things that happens to a county that gets in financial distress and financial trouble, the first sign of that is when the school budget goes over 50%. It is a consistent metric that can be measured. It's pure data. The first thing that goes wrong is the school system goes over. So I just want to repeat this because the people hear this, oh my, I have no desire to cut any salaries from our teachers. Okay, that's not anything I'm talking about. But I think last year there was 54% of the budget, right? And I've made this clear. I've talked to people on the school board of what I'm shooting for. And I think that we have to get like this with department heads. I'm going, look, there's a percentage that we're looking to reduce things by. And I've already told them, I said, I'm looking for you to knock off at least a minimum of 4% off your budget. I don't, in the big scope of things, that's not that much money, right? I mean, it's really not compared to how much we give them. But I'm looking for you to get things back under control a little bit. And I think that comes down to most schools don't know what they have. So that's where wasteful spending comes. And I use an example of this. There are weighted vests that kids use that makes them feel safe. You guys are aware, they buy these vests. A lady in our community needed one of those, and she was at Potomac Elementary School, and they said, it takes us about 3 or 4 months to get that for you. A couple weeks later, she was at Sealston up there, and they go, oh yeah, we got about 10 of those in the closet. You see? So Potomac was getting ready to order a bunch more of these weighted vests when we don't even know what we have, and it's sitting in the freaking closet. We need a new computer at a school. Well, why do we not know what all the schools have? There's junk, there's computers sitting in here that aren't being used. Can we just take something and shift it to another school? Like, that's the type of inventory stuff that we need that's going to help the budget itself of knowing what we have, communication between the schools themselves of knowing what we have, and why are we repeating these things? So we ought to be to look at some things and go, man, we just bought a bunch of stuff last year for this one location. What happened to the stuff that we had before that? And utilizing the things that we already have. So those are some things that are going to help us as far as cutting down on what we're spending. But as part of it is we have to understand what we have. But I also think we need to talk to department heads about we may even have a number where we're looking at them and say, look, I want you to figure out a way to decrease your budget by X amount of dollars. I don't want you to, if there's services that you need that are absolutely positively can't do without, we need to know what those are, and some things that maybe aren't that way, like there's some things that they're like to have, kind of like, and we have to I think we have to work with them, but it's hard to do anything without having some numbers as far as what we're projecting to do. It's really hard for me to even have a budget session right now if I don't even know what we're projected to do. We ought to be able to pull numbers from previous times and kind of, if I could look at 21, 22, 23, I can kind of see the percentage that things are increasing and going up. So I kind of get an idea what's happening. is being able to see that right. Am I right? Just being able to see the picture and understanding this is what they go. Because I think a lot of people just going to go, well, last year, every year we increased the budget by 5%. And so the next year rolls around and that's how it feels sometimes. So I don't know, but.
Ms. Han, we used to have a sheet that would show us.
So that's what I was getting ready to mention. So we do have a huge budget spreadsheet, but because it's even bigger than that,
I know you shrink it down.
Well, we put it on the big sheet.
Yeah.
It's not on any of the sheets the size that you have. They're larger sheets, and it does have several years. One thing that we haven't provided that yet is it has the schools for last year, but we can certainly print it and bring it to the next session.
Can you do that? Bring it to the next session?
We can print that and bring
one
it
that
to the
was
next
done
session.
from last year.
For us? I think so.
I've seen it. It is very helpful because you can track by year. So you just understanding that it's the last year. I mean, I have it at home. I could have brought it and showed it.
And I mean, it's got, because all of the spreadsheets that we do, everything that you have in front of you, there are formulas that go from each departmental budget over into that spreadsheet. And we actually, it's broken out by how much increase each department has from the previous year. And of course, this year, one of the things, and I think we already touched on a little bit, was we have to do a reassessment next fiscal year. So that's something that is 100% increase over last year because we do it every 4 years. And it's done by a contractor, and we have to put that out to bid. So that is something that's in next year's budget that is an increase and can't be cut because we're required by law to conduct that. But this big spreadsheet, and we'll bring it at the next meeting for you all, and it will show you it has the current, what we're projecting and from fiscal year 21 up to current.
All right. And I just want to reiterate, because I know I'll get misquoted online by everybody, I'm not looking to cut teachers' salaries. Okay, that's not what we're looking for here. So I just want to reiterate that because there'll be a bunch of people online going, he's going to fire all the teachers or something stupid. So anyway, thank you, Ms. Hahn.
Mr. Stroud, did you have a comment, or do you want to wait to the end? Or
Well, I had a comment based on that, but I'll wait.
you want to wait to the? Okay, thank you, Mr. Stroud. So I'll give you a good example for the schools, and people might have heard me for the last several years. I've been bugging the schools to be accounting of everything they have and having a place to store it. And that's on our side of the house too. That's why I've been a bear about trying to create a maintenance building and right next to it, a place where we put everything. And Mr. Stroud and I were in the old middle school today, and that's the perfect example of why we need one of those facilities, because there's stuff in there from the schools that probably shouldn't be in there. There's stuff that we need to get rid of and put out procurement, whatever the process is to dispose of these items, because they're not going to be used by the schools anymore. But the point of the matter that it's all across the board. There are places that we can make sure if we get our inventory under control, you might not have to buy this stuff. And I do give the school board staff and Dr. Boyd credit. He has heard me say that many times, and they are working on it. But we need to do it on our own side of the house, and not because Mr. Stroud and I saw a lot of stuff that probably shouldn't have been in there. And it's sad to see the condition of the building and that there's still stuff stored in there. And we got to stop, as I've said many times, storing stuff in every building that we have that's not occupied, because we used to do it in Ralph Bunch too. But this is my idea, so tell me how everybody thinks for the next workshop. And I'm not the chair, so I might be overstepping my bounds, but as the vice chair, I'm just putting it out there, is that we take the budget book, and I know, is it by alphabetical order, Ms. Hahn? How is it? I know it had tabs and it was in an order.
I think it's in order based on the big budget spreadsheet.
Okay, so how about we take 5 departments each meeting and have them come and work through those. Well, how does everybody feel? Like 5 departments, how many departments are there? How many tabs? Some of them we can consolidate, because like the courts can come together.
So some of the tabs, like Parks and Rec has 4 different budgets.
Right, so they could come as one entity.
And 2 of his budgets, their expenditures have to equal their revenues.
Right, because I know some
So
of them is paid by user fees and like the courts,
his,
some of the other ones, they're paid by grants that are we have to put in the general fund, correct? But they're grants that are given to us and they pay from them, but they're reflected in our general revenue. Go ahead.
For the largest departments, I don't know that we want to, I'd probably reserve one for a meeting. Because if we're talking about like actual chunks, impactful chunks of the overall budget, we probably want to deep dive in with them during one session, not stretch ourselves out for the sake of jumping to somewhere else.
Would you be able to identify which are the biggest ones that we could do?
So,
one?
Mr. Kusenberry, as I mentioned at the last meeting, I believe you were probably offline by that time. Mr. Kusenberry had sent me a proposed agenda for tonight's meeting, and in that proposed agenda, he suggested that you would want to have like social services, the sheriff, and EMS come because those are some of the big 8, departments with some of the big budgets.
So how about a suggestion is to bring, because those are the biggest, we split them up over 3 meetings, but have maybe 2 smaller ones come with them so we could knock out 3, 3 at a time. And then have like when the smaller ones, maybe 5, but you knock out one of those big ones with a couple of smaller ones that won't take much time. Because some of them, especially for the courts, are all state funding. That's just we're a pass through. So there's no real you can't say no because it's state funding. It's mandated that we're just a pass through because that's how the bills are paid. What does everybody think about doing that? Like to split it up that way. And then what we could do at the very end is tackle the outside agencies based on how much money we have left. I think that might be a better way to do it.
I'd also recommend we save puts so the new requests budget expenditure increases till the end. Because if we can start to pare back the agency budgets, then we'll know what other pool of money we have that we could allocate to new hires or new resources, new software systems, so on and so forth.
So based on that recommendation, that's a good idea. How about we go the departments, the outside agencies, and then the new positions? Does that work for everyone?
Yeah, Madam Chair, do we also want to deal with the ARPA monies at that time with those departments because that could take money right out of their budget?
Yes, because we do have ARPA.
We could purchase that with ARPA money so we can get that out of your budget. I mean, we want to look at those things at the same time, I would think.
And Ms. Hahn, how much ARPA fund, the exact total we have left? Because it has to be expended, it doesn't have to be spent, but it has to be decided
encumbered.
on. Encumbered by December 31st.
So I had, I don't know if any of y'all watched or attended the Board of Supervisors meeting. I believe it was the January 20th?
It might be. Explain what an ARPA fund
what
is.
the ARPA and what encumbered. So they had been saying obligated, and so what obligated now means is that you have to have in some way, whether you have a purchase order or a contract or something for those money. So it's roughly around 700,000. I was going to be coming last night to return some money, but I found out that the preschool study needed a little extra, and I was returning that money to it, so that's why that was stricken last night. But I can go back and recalculate after that, and we can bring the list.
That would be great.
At the next meeting, the request, and I'm not sure that all of those were in the operating budget because that's not how it was presented by Mr. Collins at that agenda meeting. So some people did go and look at one-time expenditures in their budgets, and then others, like I will say that finance did put a request in there. It was something that I did not put in the operating budget because I didn't want to inflate the budget and try to replace some furniture. And last year I was going to put in a request to replace some of our furniture. We've got some pretty old desks up in the finance department, but when I was asking other people to cut, I went ahead and cut that out of the finance budget because I didn't feel comfortable asking other people to cut if I wasn't willing to cut the finance budget.
I appreciate that, Ms. Hahn. The ARPA funds are COVID related, and originally they had a lot of rules on them, but now to make sure you allocate the money, they've relaxed them, but they can only be for a one-time expense. They can't be for personnel or
right. So
they were originally, but not anymore.
Well, during the height of the pandemic, you could use them for bonuses or which very little of the money was used for some bonuses. It was to even out some money that the state had given a particular department, the sheriff's office, that they only provided bonuses to the comp board funded positions, and the sheriff's office is not, it's probably about half of his deputies we do not get any money from the state for those deputies. They are fully local funded.
It was complicated.
Yeah.
Well, just to summarize.
The CARES money was more for salaries than the ARPA money. And so the ARPA money, we qualified for, we got $5.2 million, and we, even by their formulas that I had to do in the beginning, and then that's what they changed, was they threw out the formula and they said, if you receive less than $10 million, you qualify as revenue replacement. And then you can use it on anything that, other than these continual, like service agreements, things that are continuous, you can't use it for that. You can't use it for salaries. But for other things that you would normally use local funds to purchase, then you could use the ARPA funds for that.
So, but we have to spend the rest of it by the end of the year.
Encumber it by the, it has to be encumbered by the December 31st, 2024, and the actual payments have to be made by December 31st, 2026.
Mr. Stroud, do you want to go yet? Mr. Stats has one more. Mr. Stats?
Thanks, Supervisor Stroud. One question about the ARPA fund before I talk about one other thing. That it's never coming back. Once we use it, it's gone, correct?
That's correct. And if we don't encumber it by December 31st, 2024, we have to repay it to the federal government.
Yeah, no. The second thing would be, you're exactly right. That's what we should do. I would say, though, we have to be mindful about March as we're planning which departments are coming, because the school board last budget cycle, that did take up multiple weeks just to go through the school board budget, because it is so heavy sum. It is very analytical. I mean, the school board budget alone was like this last time. And so we just have to be mindful of that as we're scheduling, but that's a very good idea.
And we can work with the schools to find out what date they're available to come. Does anybody over here have questions? I'm going to go Mr. Stroud next. Anybody? Mr. Stroud, the floor is yours.
So,
We got a few things.
we're not limited.
We're not limited to the past. Okay. I like innovative thinking, and I don't like people to say, well, we've always done it this way, because I'm not limited to one way. I'm not against the department heads coming in. So you guys have recommendations, I'm good. I feel like the tendency is, and this is anywhere, whether it's your kid or a department head, people want to defend their budget. Okay. A lot of people have a problem being honest and reflecting on that. I did a lot of budget battles in the military, and I never lost one. And I had a way of approaching it, and I think that we should probably do the same thing, because somebody may ask us that question. But what I would do whenever the commanders, they came and they said, okay, told me to cut my budget by, however many $1 million or whatever, I would just simply ask them, what exercise do you want to cut? What do you mean? What exercise? Where do you not want to go to? You don't want to go to Norway? Well, no, we have to go to Norway. Okay. So you don't want to go to Turkey? No, we've got to do that. Okay. So we don't go do a firing exercise in Guam? No, we've got to do that. Then you don't want to cut the budget. You see where I'm going there? What capability are we willing to lose? And that's, if the department heads look at that and say, okay, well, this capability we can do without, then that helps us. The other thing, and Bill hit on this really well, I think, is spend smart. So a lot of times you can solve some of these problems if you just spend smartly. Don't lose the dollar you've already got, and spend smartly. In talking to a teacher at some point in a recent past, they brought up and said, you know, in the early part of the year, we don't have any money, we can't spend it, we can't spend it. And then at the end, you know, early in part of the year, we have these things going on, and I don't know what they are, okay? Somebody here probably knows way more than me. But the teacher wanted to go do these things, whatever it was, they didn't have money. And there's a process that the school actually has to get money, and I guess it's real hard to get it, yada, yada. But they get to the end of the year, and they're told, okay, hey, we got this money if you want to do something. Like, no, we need to do that back in the spring, and now you're coming to us with it. So, you know, that's something to think about for those that have kids or know about this, Mr. Grigan. I know that you're into that pretty good, but those are things to look at, and maybe whenever that comes along. Inflation. People have a tendency to say, well, inflation's this, so we have to increase by this. And my comment there is that the same inflation that whenever people come in and they're asking for money, well, we've got to have 3% inflation or 5%, whatever it is. Well, guess what? That same inflation is affecting the people that are paying the bills. So they've already lost that money. And now you're going to ask them for more. And that's where we come into the challenges that we have. Ms. Hahn, you mentioned the assessment earlier, and I held off, being required by law that we do the assessment, and I've read that. So we do have to do that. My question is whether we have to hire a contractor to do it.
Currently, I do not believe that the Commissioner of Revenue has anyone on staff who has the assessment skills.
Ms. Puckett, would you like to come? Ms. Puckett, can you come up to? This is our commissioner.
Hello.
There you go.
There we go. Currently, we do not have anyone on staff. I would love to go that route, but we're not there yet.
Do you have any idea how much that would cost? It would obviously be a new position, correct? Or
And would you need more than one?
More than one, definitely. And it would be beneficial because currently we're having to we use Pearson's, and they send someone and they do new construction and all of that. So if we had somebody on staff, that would benefit us.
So I have some thoughts on that. We don't need to beat that to death here. If we can have an offline discussion that we can present to the board later, maybe.
Okay.
Please. Thank you, ma'am.
Thank you.
thank you for coming up on the spot. I appreciate it. Mr. Stroud, do you have any other?
So one thing that I don't know, I thought about is if there's anything that we're looking at and somebody says that, or somebody's thinking that I don't want to touch this, that we say, you know, this area, this line of funding or whatever it is, you know, Mr. Stat, you may know from last year, but if there's anything that was a don't touch item, you know, maybe to be able to identify those. And then the ARPA funds, whenever I'm hearing ARPA funds, and Ms. Benner brought up the old middle school today, and I went in there a few years ago, whenever Chris, you ran that study we did, and it looks way, way, way worse now than it did then. And that's a one-time use that we may be able to apply the ARPA funds, and something's got to happen. That is not going to get better. It is not going to get better unless something happens over there. Okay, there are things there legitimately that there are things that we could have a yard sale, or things that we could do an online auction. There's online auctions that the state uses, the sheriff's department uses it. But there's things that could be sold. I'm interested in all the metal on the roof, but there's things that
a lot of the items that are stored in there belong to the schools. And that the schools, we did have the previous procurement manager met with the director of general properties as well as the maintenance manager for the schools, went in there and looked. I know that it was asked of the schools to remove those items. So I'm not sure I didn't go, so I don't know what who?
Ton, I can
belongs
tell you
to
what's
who?
in there. There's a lot of chairs from the
Those are the
current
schools.
middle school that were taken out of there when it was the high school and they renovated it. Well, actually, the last renovation, because I remember all those chairs and they're stacked everywhere in there and there's metal. So we went in there today because I had talked to Dr. Boyd about how that we're going to tear it down. And so they came in there to look at things they could take out to actually use and not use, reuse the scoreboard in there or reuse the backboards for the, maybe to look at what they could remove that they could use in the schools to not come and ask for that request. So and what other artifacts they might want to keep, like the plaque on the wall to keep their historical artifacts. So they identified quite a few items, but there are items, and I already talked to Mr. Clark earlier today, there was a lot of metal chairs they didn't want. And so they could be useful to the county, repaint them, just clean them up. They were really nice metal chairs, but there's stuff that, as Mr. Stroud said, that could be repurposed, but I do understand that that was bought with school funds and it probably would have to be sold to be used for the school system because it is stuff that were in the schools and bought with school funds. And I'm not sure exactly the procurement law. I'm not an expert on procurement law.
And yes, so we actually do handle the surplus. My procurement team handles that for the schools, but the funds that would be made off of it would be
Go back to the schools.
Go back to the schools, or we kept it up because
Right. So I don't know procurement, but there were some items that the county owns that are in there too that needs.
So I know that they were asked to get what they wanted out of it and everything. So that's something that we would, if once they get what they want, then we could do a survey of what's in there, take pictures. That's what we need in order to advertise them for surplus and to sell them.
Yes, I think they did look at it to identify what they want to take out. Go ahead, Mr. Strong.
Yes, ma'am. Thank you. So I would say that if we make a note that we had this discussion tonight, that we need to set a timeline and say, if the school wants something, they need to come get it out by, and you pick a date, 1 March or whatever it is. And then anytime after that, that's where, you guys start setting up online auctions, have if we get it all outside and people can cut like a rummage sale, whatever, and get rid of stuff. There are tables over there. There's usable chairs. There's a lot of that, but we need to get the building emptied out and then use the ARPA funds however we need to hire people, come in and empty it out, and then start looking at either dismantling, get bids on that. But we don't need to wait on that. I think to move down that road, and that's a good use of ARPA funds. That's just from my view. I guess the last thing I like to say tonight is I am very, very grateful for everybody that showed up tonight because I know the meetings we have, they're taxing on us. And whenever you guys show up, that is a commitment, and I am very appreciative. And for you guys that volunteered to be on this budget committee, I know each and every one of you personally, you guys all bring your own abilities and uniqueness to it, and is very confidence building for myself. And lastly, before I shut up, this has been the best meeting I've had since I've been a board member, ma'am, and you've ran it very well. It's been the lowest stress, such easygoing, and I'm very grateful that the way you've conducted the meeting tonight. Thank you.
Mr. Stroud, I appreciate that. Thank you. And thank you for your thoughts for the staff and for the other budget members. With that being said, is that what I outlined, is that okay with everyone to do that?
So then my question is, who do you want to come next week so that I can contact them?
I was just going to ask you that. Who would, let's throw the fish in the water. Who is the biggest budget item? Which department? Number one.
Outside of the schools, I guess it would be.
Minus the schools.
Fire and rescue.
All right. So how about fire rescue? And then who are our 2 lowest hanging fruit, or 2 low ones that we can add? Because we're trying to get everybody.
So there's some that we fund very little, and I don't know that you really want them to come, like the magistrate, the combined courts.
Would you guys be okay if we left them off? Because a lot of their funding we are a pass-through, so they are required. And I know Ms. Gussman is very particular on her budget, so.
Well, I was talking about referring to the combined court. Because it's very small. That's
I know what you're saying.
Ms. Connor.
So are we okay to leave out the courts?
O'Connor.
So we won't have to bring the courts. Is that okay with everybody up here? Leave out the courts?
Yeah,
Okay, so combined, or is there any other ones that we can leave off because they're very,
the magistrate,
that okay, the
think I mentioned
magistrate?
that theirs is only like $2,400.
Okay, so those are two that, we're trying to. Mr. Stats, did you have a suggestion?
I was gonna say if we're bringing the fire department, we can also just do Parks and Rec. That would be another one to add.
Well, Mr. Clark says he could do it right now. Would you guys like to entertain that? Nope, Mr. Stroud gave you, no? I love the expression though. That was the moment for tonight.
Only
about
because I want to see it ahead of
Can
time.
you come back with fire and rescue? Thank you for volunteering. And then do we have one more that we could throw in?
Mm.
Trying to keep it to 3.
We could do finance since we'll be here.
Finance, thank you. Thank you for volunteering. I appreciate it. And then we could decide on the other ones in the next meeting, or you could come up with 3 more for the, Mr. Stats?
One other thing, I know the meeting's running long. Those documents, those year, going back to 2020, 2021, I imagine the board only wants it for the department that's there at the time.
Well, we can't do that because it's,
The system.
I mean.
It's a big spreadsheet and it lists
You
everything.
would have to hide all,
Don't worry about it. Then I thought it would be more easy for y'all, but.
Is that Excel-based or PDF? Excel-based? Can you share it with us too? That works.
All right. Do we have any other questions? Because I'm going to ask for the next, and then we get out of here. How's that? All right. With no further questions, do we have any secondary public comment in the audience? Do we have any online, Mr. Dines?
No, Madam Chair.
All right. With that being said, do I have a motion for adjournment?
I'm making a motion that we adjourn until Friday at 13:30 in the Rivercombe.
Could you, for those of us that are civilians, could you
Sorry. I make a motion that we adjourn until Friday at 1:30 p.m. in the Rivercombe building here for the interview for the interim county administrator.
All right. Do I have a second?
Second.
With that being said, we have a motion properly seconded. Any further discussion? All those in favor say aye.
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 Any nays? Chair votes aye. We are adjourned. Thank you, everyone. Well, I hit it better that time.
That's what happens. Like, there's sometimes like, I guess they talk at work.